Federal Drive is presented by GEHA, Government Employees Health Association, proudly providing health and dental benefits to federal employees and their families. Visit GEHA.com.
A lot of people have life insurance, but that doesn't always mean they know what it's meant to cover or whether it would actually do what they expect. For federal employees, those questions often start with FEGLI and follow them into retirement. Here to help us sort through some key decision points is Tammy Flanagan, Principal at Retire Federal. Tammy, thanks so much for joining me today.
Thanks, Terry. It's great to be back.
I really appreciate that you agreed to talk to me today about life insurance. I think when it comes to this topic, a lot of people think they're supposed to have it, but they don't know what they're supposed to do. I looked at some survey data from June 2025 from the National Association of Insurance and Financial Advisors, and they say 41% of adults say they are only somewhat or not at all knowledgeable about life insurance, and 75% have no idea what it should cost. So let's start there. What is life insurance? It's not car or home insurance. What is it supposed to do?
Yeah, and it's also not necessarily long-term care insurance, because a lot of people will tell me, well, I have life insurance. I don't need long-term care. And there are some long-term care policies included with life insurance. But when it boils down to the basics, there's really only two kinds of life insurance. One is called term insurance, and the other one is either whole life or cash value. And so the term insurance is what most people need and purchase because, number one, it's cheaper than whole life. And number two, most of us have a finite need for a lot of life insurance. It's mostly when we have the most financial responsibility to others, whether it's our spouse or children, maybe parents even. But it's whenever we have to worry about if something happens to me, who's going to raise these kids or who's going to pay off the mortgage, and making sure I'm leaving my family with some level of comfort financially.
So when we think about other kinds of insurance, home insurance, auto insurance, you think about replacing that asset in case of a loss. Well, you can't obviously replace a life in case of a loss. So what is life insurance really doing from a financial perspective?
It's replacing the income. So in other words, if I'm working and I'm the breadwinner of my family, I want to make sure that when that income stops, if I should die, or, think in terms of disability insurance, if I should become disabled, how is that income going to still come in when I'm not able to produce it? So, you can't necessarily buy enough life insurance to replace that full income unless you get, extraordinary amounts. But for some people, as much as you can afford is what you need.
And you mentioned term and whole life. What are the differences between those two options?
Well, term insurance, as the name implies, it's for a specific term. So you've heard of 20-year term policies or even sometimes 30-year term policies, which means if I buy that policy today and it's a 20-year level term, that means for the next 20 years, I'm going to have that level of insurance, the amount that I just purchased. And in most cases, that premium is going to stay the same for the entire term of the policy. Now, some of those term policies are called renewable term, which is a little bit deceiving because you think, oh, it's renewable. So after 20 years, I'll decide if I need more and I'll just renew it. Well, the only thing that really means is I don't have to pass the medical underwriting anymore, but the price is not going to be what I've been paying for the last 20 years. In fact, you probably won't want to renew much of that policy if you wait 20 years to check the premiums. So that's what we normally buy. In fact, that's kind of what our government life insurance is. It's not level term, but it doesn't have cash value. So it'd be more similar to a term policy than whole life. Whole life by the term is cash value. So that means I'm paying a policy premium, which is fairly high. But if I need the money at some point, I can take out the cash value. When I pass away, even if I live to be 98 years old, there's still going to be some insurance benefit payable to my beneficiary. So there's some extra benefits to that, but you certainly pay for those benefits.
Tammy Flanagan is principal with Retire Federal. Tammy, let's go back now and talk specifically about federal employees. They have FEGLI. What is FEGLI from a policy perspective, and how should people be thinking about it across the course of their career?
I always remember one time I was teaching a class and this woman said to me, we were talking about FEGLI and life insurance, and she said, "You're telling me that I don't need life insurance anymore and I might be able to cancel this?" She says, "But I didn't get my money's worth. I paid all this money and I got nothing to show for it." And I had to think about that. And I'm like, well, you really don't want to get your money's worth out of any insurance when it comes right down to it. But in a way, it did serve the purpose because while you had it, and fortunately you're still here, but if something should have happened to you, it would have protected your children or your family to help replace some of the income that you have. And that's really what FEGLI is designed for. In fact, when FEGLI started, it was really designed to cover people who went off to war. Federal employees who were going into World War II and maybe didn't come back, it protected their families. So that was really what the emphasis was on starting government group term life insurance. But today, most employees carry, if nothing else, the basic. And the nice thing about basic FEGLI is it floats with your salary. So every time you get a pay increase, the level of that insurance goes up. And the price of it stays at the same price per thousand throughout your career. It's 16 cents per thousand biweekly, which if you're 25 years old, that's expensive. But if you're 65 years old, that's a pretty darn good rate for life insurance. So what FEGLI does is for people 35 years old and younger, the death benefit is double your salary. And then if you're between 35 and 45, that goes down 10% every year until at age 45 and beyond. It's always valued at your current salary, rounded up to the next 1,000 plus 2,000. So most employees keep that, maintain it. I never generally recommend dropping basic life because it has some other benefits to it. It has something called a living benefit, which I just told somebody about last week because this is a woman who's in her 50s, diagnosed terminal. Unfortunately, she got a really dreaded prognosis. And FEGLI says that if you have a life expectancy of 9 months or less, you can become your own beneficiary, which in her case is going to come in handy because she's out of leave. She's facing leave without pay. She's trying to decide what to do next, and she needs the money to replace her salary since she can't work. So that's going to come in real handy with, in her case, $200,000 worth of basic life at her access with no taxes because it's a life insurance proceed. So that's one benefit. The second benefit of basic life is when you retire, if you elect the 75% reduction, there's different options, but if you elect that one, once you reach age 65, you stop paying the premiums, yet the coverage will remain at 25% of its original value for the rest of your life. And sometimes we kind of jokingly refer to that as funeral coverage or burial policy because what's left is always going to help to cover those final expenses. And it generally comes within 2 weeks of applying for it. So it's a pretty quick turnaround.
So Tammy, as feds are thinking about retirement, how should they be thinking about FEGLI? Should they be thinking about replacing it with a private product, self-insuring? What are the considerations that you recommend people take on board?
Yeah, the basic life, like I said, put that aside. It's something I would not recommend dropping because it has some hidden benefits. The option B coverage is where you can elect multiples of your salary, up to 5 times your salary. And when you're young, starting a family, buying a house, that might be when you need 5 times your salary plus the basic. But what happens over time with option B is it gets really expensive. Between the ages of 50 and 60, it more than doubles in price. And during those 10 years is usually when I get the most questions about, why do I need this? Look how much it's costing me every 2 weeks. Can I drop it? Can I reduce it? And the answer is yes, you can do both. You can either reduce the multiples or drop it altogether. But really, the time to reconsider that is not in your 50s. It's in your 30s and 40s when you're still really insurable and you can go out and buy a term policy for a lot less than that total cost of FEGLI over the next 20 years. And so I would suggest looking at term insurance if you're insurable. And FEGLI over time gets real expensive, so therefore it's a good comparison. The only time I would say option B is a really good deal is if you're not insurable, because every federal employee has the option to elect FEGLI coverage either when they're hired or when there's a life event, they get married, they have a child, they go through a divorce. You can increase that FEGLI with no questions about your health. And that's really a real benefit for someone who has pre-existing health problems.
So for somebody right now who's looking at their insurance premium, or maybe we've provoked someone to go, well, I really should go look at what my life insurance is. What are the most important things they need to think about right now to assess whether they have the right or sufficient coverage?
Well, you got to figure out how much life insurance you need, right? So you're trying to think in terms of if something happened to me, who is going to be at a loss for that income? Do I have children that are still being cared for? Do I have a spouse who doesn't have other sources of income to support themselves? Did I just buy a house with a big mortgage? So you really have to assess your needs first and foremost. And then you have to figure out what the best kind of insurance to purchase. We talked about term life, we talked about whole life, and then there's FEGLI. So which one of those is really going to meet those needs? Or maybe it's a combination. Maybe with the limitations of FEGLI, that's not enough. So I'm going to buy my FEGLI coverage, and then I'm going to supplement it with a private term policy during those years of the biggest need. So you have to give it some thought, maybe talk with your financial advisor if you're working with one, because they can generally give you quotes on a lot of different insurance companies to help you look at the different types of insurance and the different policy rates.
Tammy Flanagan is a principal with Retire Federal. Tammy, this has been so helpful. Thank you so much for joining me.
You're welcome, Terry. Thank you so much for having me.
We'll post this interview at federalnewsnetwork.com/Federal Drive. Hear the Federal Drive on demand. Subscribe wherever you get your podcasts.